So many entrepreneurs give up part of their business far too easily. They give up control and ownership just to get investors to give them a big pile of cash. But what if there is another way? By keeping control of your business, 100% ownership, thus increasing your wealth and using your cash flow to fund the growth of your business. And actually, if you go through the process that I'm about to share with you, you're going to become more wealthy, have more control, and I think long-term have a better life. Because if you bring investors, if you bring in venture capitalists into your business, you're going to have people that you have to answer to. That cash doesn't come for free, and usually it's very expensive. And people don't realize how expensive it is until the investors call the shots. So let's break it all down in this video. Now, before we break this video down, let's understand what investors want. These guys want returns. And what entrepreneurs want, that's us guys, we're sometimes just looking for opportunities, and we want to be the fusing of these two things. So we want to be thinking like an investor, but also be an entrepreneur, and really also have ownership over our life and our business. And this is the key word here in business. It's ownership. Who owns the bleeding thing? You want to own the thing. You don't want to give up anything. And do you know what? Here's the big thing that I found out about so many people in business. They might only give up 20% of their business to an investor, and they think, well, they only own 20%. But the devil is in the detail of this thing called the contract. And in this contract could be some clauses that say we only own 20% of the business, but if we don't like what you're doing, this contract will be able to veto everything that you have on your 80%. They might have things in the contract that say, well, if you don't meet certain profit targets, we can take the business over because we've lent that money to you. Charges, debentures, controls over the business. That's why if you own 100% of what you've got, you never have to worry about that. And here's the super sad thing about business. Maybe someone's got a £1 million business and they're having a tough time and they need 100K of cash flow. And the investor comes along and says, well, hey, I'll give you 300K. We'll put that into the business. We'll open loads of things. We'll increase the size of the business. That solves the 100K cash flow problem. And then we've got another 200K to grow the business. And the entrepreneur thinks, wow, this is fantastic. All my cash flow problems have gone away. But actually, a year down the line, you've got someone that starts calling the shots that wants to sell the business. And you go, well, I think so. You've only got a minority, but actually, you didn't bother to read the contract. And the contract says we can sell the business whenever we like. It's certainly how venture capitalists work, even with a minority stake. So if we look at a big timeline here, and this is 10 years and this is 0, venture capitalists and private investors are looking to get out at year 5. But actually, entrepreneurs might want to stay in. Well, these guys can make a decision here, and you might sell before you're ready, or might sell after you're ready. And you just don't want that for your business. And that's why I want this video to be a video about keeping a 100% ownership of your business, not being dictated to by anyone else, because you've started the bleeding thing. It's your baby, and you should decide if you're going to sell or if you want to keep it. So what's the ways that we can navigate these storms? Well, the first point is to have a business where you create waiting lists. If you're in business and you want to create more cash because you've got a cash flow problem, create a new product, service, and idea, but rather than launch it and actually make the thing, create a waiting list so that you get signals from the marketplace that they want to buy. And when they go on this waiting list, which will be free for them to go on, it will give you an indication that people want to buy from you to see if your next product or idea is really going to work. And then you can launch it and know that you've got a list of people ready to buy straight away. And lists are a funny thing in business. So many entrepreneurs and business owners, they've got really big businesses, but they don't have the magic list. So the list is a waiting list, but also a database. We want to have a really high active database, lots of email addresses, lots of phone numbers, so that if we need to create more cash flow in the business, we can send a letter out, we can do some telemarketing, or we can send an email out and get people to buy from us. Now, I've got over 500,000 people on my database. Literally, I send an email out to that list. It creates sales instantly. And I would say my lists, my waiting lists and my databases over the years have been the biggest single reason why I've never had to get investors or venture capitalists into my business in the last 10 years. I did have an investor in some of my companies for a short amount of time, and I bought them back out. If I'd have focused more on database marketing, creating waiting lists and having an active list, I don't think I would have had to have done that investor deal. It's because I didn't understand marketing as much as I understand it today. So the first thing that you need to do to avoid using investors, before you start a business, you create a waiting list to see if you've got a signal that people are going to buy from you straight away. If you're in business, you create more waiting lists and have an active database that you communicate to and keep that database in tip-top condition so that if you need more cash, you create products and services to your database, people that have already bought from you before, and then they buy from you again, thus giving you loads of cash. Now, there are certain business models that are set up for cash flow efficiency way more than others. Let me give you an example. You're a restaurant. You've got to buy a load of food. You've got to prepare the load of food and hope that loads of people come and give you money. And thus the cycle goes again and again. So in that situation, you've actually got to front out pound notes in the hope that you're going to get pound notes into the future. That's the timeline of the restaurant model. And what if those people don't turn up and then the food goes out of date and you've got wastage, et cetera, et cetera? We don't want that for your business. Now, there is another restaurant model that works so much better. I don't know if you've heard of them. They're called Starbucks. Now, Starbucks have the Starbucks app where you can go and buy drinks and coffees and stuff like that, and you can preload cash onto your Starbucks app. You preload the dollars on there, and at the moment, Starbucks at any one point in time have $1.8 billion worth of preloaded cash on to the Starbucks app. Now, what can Starbucks go and do with that cash? Well, they can use that cash, there's 1.8 billion. I mean, this is a horrific amount of money. They can go and use it to build plants, to make more coffee, or use that cash that customers have paid them in advance before they've actually bought the bleeding coffee to go open more stores and buy real estate and invest with it. It's absolutely unbelievable. Now, Apple have this where people are paying them up front for their Apple Music. Insurance companies have this as well. I mean, if you think about me, I'm a man that pays around 500k a year in insurance. I either pay that money up front or I get finance to pay that money. I give it to the insurance company on day one. They have my 500k, and then I pay, they can use that cash to go and invest it and do other stuff with it. And that's what insurance companies do. So if you could find business models like that Starbucks business model where people give you upfront cash, they prepay for their service, mamma mia. Mamma mia. If you think about Costco, which is a brilliant business that I always talk about. Now, Costco is this massive business, $380 billion of cash. Now, yes, they have to pay for all the stock that they sell in their shops, like any shop does. Actually, Costco do turn their stock very, very quickly, and we've made a whole video on the wonderful Costco business model here on the YouTube channel. I urge you to go and check it out. I'll actually put a link above my head for that. But they do about 380 billion in sales. But the shop runs at a very, very small profit margin. They make about $9 billion in profit as a business, but 80% of that profit comes from their membership, which you pay up front, membership that you pay up front to use that shop, $100 a year, £100 a year, whatever it is, to go and shop there. So they're collecting all that cash up, which they can then use. And if you go and check out Costco, they've got plenty of cash. And having that membership model has allowed them to have lots and lots of prepayments. So if you can find a business model where people prepay for your product or service, or a membership system where they're paying you cash in advance, you're always going to have a cash flow positive situation, which means that you won't need these nasty investors and venture capitalists. You can keep 100% ownership of your business by choosing the correct business models. It's something that I'm always talking about here on the channel. There are so many businesses that just do okay, but if they could slightly tweak the model, then it could be fireworks for profitability. The third thing, you need to just be a fantastic marketeer. Now, we alluded this at the beginning of the video, but really, this is what great entrepreneurs that I ever meet, they're marketeers of their thing over operators of their thing. Now, the reason I say that is because most people are operators of their business, and then when they've got some time, they do some marketing. So let's put some percentage on it. You probably heard this 80-20 rule that we talk about in life, that most of your profit comes from 20% of your customers. Most of the nutrients that you get from food comes from 20%. The 20% of your team are the people that are the most efficient and profitable, all those things. Well, actually, most business owners spend 80% of their time operating their business and 20% of their time marketing their business. Now, what I want entrepreneurs and business owners to do is flip that around. So they spend 80% of their time getting and keeping customers. Now, if that could happen, then they're spending more time on income generating tasks. They're bringing more cash into the business. And if you can think about that more and spend more time on marketing, then you absolutely win the day. Now, I wrote a book called Getting Customers Easier, Faster, and for Less Money Than You Thought Possible. And there's tons and tons of great pieces of advice in there. So let's look at some of those now. Creating a database. We spoke about this at the beginning of the video. The old school marketing. Let's focus on that. Make sure that we're doing direct mail. That's actually sending letters in the post. Don't forget the power of the telephone. I absolutely love text message marketing. I love lumpy mail. This is actually sending packages in the post. Now, people are getting my attention. They know that I love Yorkshire Gold tea. And so they send me boxes of Yorkshire Gold tea to my office with a letter attached to it. Does that get my attention? Yes, it absolutely does. People are sending me lumpy mail all the time, and people actually put it on my desk. So it gets my attention, and I actually read this stuff. So lumpy mail, telephone, direct mail, old school, text, databases. And actually, if I could really sum it all up, when you're doing marketing and you don't want to bring investors in, really you should build your business like you're the local MP or the local senator or the local councillor, and look at the process that they go through to get elected. Yeah, they'll go on local newspapers, local radio stations, they'll try and get on TV, they'll put leaflets through the door, they'll write articles. They're doing grassroots local marketing. There's loads of it in my book, Getting Customers. You can get it on Amazon. I'll also put a link in the video description, or you can get it on my website, jamessinclair.net. It's such a great little book that will help you get customers for your business. But in essence, copy what local politicians do, get your business known, become famous to a few. You don't need to be famous to everyone, but you want to be famous to your niche that you're in, and I think you get great results. Number 4 is understanding the steps to success. Now, I'm just going to draw some steps here and talk about my personal career. I wanted to own visitor attractions. I wanted to own farms and zoos and do all of that good stuff. To me, that was up here. When I started at 16, I started out as a magician, as an entertainer. That was my first step. I was effectively swapping time for money. Over here is an investment. I wanted to get there, but I took the steps to get there. So let me explain those steps. I built an agency after that. So I was an entertainer. I was a gigging magician, swapping time for money. My next step was to employ some entertainers. I employed those entertainers, and that was my first stage of becoming a business. I was now managing other people. I then set up an event prop hire business. I was hiring out bouncy castles and photo booths and stuff people needed for parties. I built a team to do that. So I was an entertainer, an agency, and then a prop hire company. These businesses were quite small. There wasn't many moats around the business. And I always talk about this. If your business over here is this castle, you want to build moats around the castle so that people can't take the castle from you. With this business being a sole trader, an entertainer business. People could just go and buy bouncy castles and props. And these people that I employed in the agency and trained up, yeah, there were contracts, but they could just go and leave me and compete with me. And I learned that, and I thought, well, these early steps were very low barrier to entry, but they taught me about business. I didn't need any investors. What a lot of people do is they start here and they go, well, I don't want to do these steps. I just want to be up here. Well, if you want to be up here and you want to start owning a visitor attraction or a zoo and you haven't got the money to do it, you've got to go and bring in investors. And I absolutely didn't want to do that. So I had my swapping time for money. I had my agency business. So look, we got one-man band over here. I was an agency over here. I was a prop hire company over here. The next stage was I opened up a family entertainment centre. So this was people bringing the party to me. And this brand was called Partyman World, and still got it today. Built that to a chain of 10 indoor play centres. But that business relied heavily on it being cold and wintry weather so that people would come inside. So I opened a day nursery next door to this business. This gave me regular repeat residual income, and people paid at the beginning of the month for their childcare for the rest of the month. And that's where the prepayments thing came into my business. People were paying me in advance of their service, pretty much like renting a house. People are paying you a month in advance, and that gave me lots of positive cash flow. I then thought, well, I've got this over here. I then went to a bank and said, hey, look, I've got this brilliant business, it's all working, and I found an old farm attraction. Will you lend me some money to go and do it up? And that's what I did. And so I went from one-man band, agency, prop hire, FECs, day nurseries, and built an ecosystem of businesses. And then I managed to get my visitor attractions, and I've taken the business on further than that. And I managed to do that without getting any investors in. Yes, I borrowed money along the way, but not in the beginning. I used all my own cash flow. And so these steps to success, I think, are really important. If your aim is to get here and you're down here, rather than just going straight up here and being that unicorn, think about what steps you can take to create your own cash flow along the way that you can reinvest rather than giving up ownership of your business. Now, the last point that I want to make is this word, debt. To me, is better than giving up equity. And let me take you through the reasons why. You can borrow money as a business owner in the last 10 years at 2-3% above base rate. Now, yes, base rate here in the United Kingdom around the G7 has increased. So the cost of debt is much higher than it was 10 years ago, 5 years ago, 4 years ago. But it is still far cheaper than venture capital money. And what these venture capitalists want is 20% returns usually. So they put £1 in and they want to get a 20% return on that in 5 years' time. And usually they roll up all of their interest so that when you sell your business, they get a big chunk of the cash. And it isn't that you get 80%, they get 20%, or you get 60%, they get 40%. You get the 60 and 40 split after all their interest and finance costs have been paid up. That's just how these guys work. And so you need to think about that very, very carefully. Debt is much cheaper, in my opinion, than giving up equity. And you'll find that out if you go to sell your business. But also, debt gives you way more control rather than equity. You might get the allure of not having to worry about cash flow in your business because you've got equity given up and you haven't got those monthly repayments. But if you're a good business owner, you know how to get customers and you know how to go out there and build businesses, and you understand numbers, you're producing a monthly profit and loss, and your business is producing profits. I much prefer people borrowing money rather than giving up ownership of their business. Only if you're comfortable borrowing money, and only if you know your business is profitable enough to service those debts. I've borrowed millions of pounds. I continue to borrow millions of pounds. And actually borrowing that money has massively helped me grow my businesses into what they are today. And we've got lots of people employed. We've got amazing businesses. And if I hadn't have borrowed those millions of pounds and continue to borrow those millions of pounds, I don't think I'd be where I am today. Yes, it's tougher now because interest rates have gone up, so the cost of all my debt has gone up. But then you have to just grow the business. You have to grow your way out of the problem. And that's what I continue to do. You have to think, well, I need to bring in more income to pay that debt down. And sometimes that's tough, but that to me is still much, much better than having venture capitalists and private equity and investors in the business that may push you down a route that you don't want to go. And if you become the cash flow master of bringing in more sales, bringing in more revenue, then you should be able to navigate using your own cash flow to grow your business. Which means, by the way, that you might have to build it a bit slower than you really want to. But here's the thing, there's always these things in life. If you know, as you go up in life, things are like this, aren't they? You know, this is the timeline. You know, this could be 1 year, 2 year, 3 year, 4 year, 5 year. If you look here between 5 and the next 10 years, that compound effect over here between 5 and 10, things get really good. But I absolutely also understand that most people give up over here. 50% of businesses are gone by the end of year 1. 80% of businesses are gone by the end of year 5. So all of this is gone. And only 20% of people here. And do you know what? Only 0.5% of people get past 10 million of revenue, and only 5% of businesses get past 10 years of trading. So if you're doing over £1 million, then you're doing really well. In fact, if you're doing over 90,000 of revenue, that puts you in the top 30% of businesses. 70% of businesses in the United Kingdom don't even pay VAT. We live with lots and lots of micro businesses. So if you can just get past that scale, get past that £1 million worth of revenue, get past that first 1,000 days of trading, you should see things get easier and easier as each year gets by, as long as you're making good profits. How do you make good profits? Well, actually, what doesn't get measured doesn't get managed. And what do you need to measure? What you're spending on labor, what your average customer value is, and a monthly profit and loss. Understand those things. And do you know what? You become so much more investable, and banks will want to lend money to you. Customers and trade suppliers will want to work with you. That's another thing. If there was a bonus number 6, I've done deals with people that have helped fund my business so much over the years that have been my suppliers. I've had suppliers help fit out commercial kitchens for us, or they've helped fund equipment for us or stock for us because they've seen how well we're doing. And there's so many other ways of growing a business using lots of little fishes rather than the big fishes, which might be the venture capitalists. And I continue to do all those things to this very day. Even when things are bigger, I'm always looking for angles to bring in more cash flow that might not just be getting in an investor or a venture capitalist. Hopefully you like this video. What I'd love you to do as a little favour is in the comments, have you got any other ideas of how you've grown your business using old school ways or stuff that isn't using investors? Have you got a really cool way of funding your business? What's your favourite sector that you've been in? Have you been burnt by anything? Have you been burnt by having investors and venture capitalists in place? Maybe you agree or you disagree. Hit it in the comments below. I'd love to read them. And if you love watching my videos, why not come along to one of my events? I'm running Business Masterclass, my big 2-day event designed to help entrepreneurs grow their business. Tickets are only a few £100, and I'm doing everything there. I'm doing buying companies, how to get customers, building your team so they're as profitable as possible, and it's live in London. You can get your tickets at jamessinclair.net. There's also a link in the video description. Hopefully, I'll see you at Business Masterclass.